Hey traders, in this video I'm going to show you some examples of my best entry that started making me real money and trader psychology of yesterday's candlestick doji. Let's get into it. So here, have a look at Bitcoin here. We've gone up and we've come down. Now we're resting below the 50, but look at this doji here. It's looking really, really good. Let's go back to where this all started from with the doji. All the way down the bottom here, we have a inverted hammer going above the moving averages. We've got our first engulfing pattern here and a second engulfing pattern here. We have another engulfing pattern there. Yep, you still would have been in that one, and then another engulfing pattern here. I'll go through the entry that I'm looking at for tomorrow, and this isn't a recommendation to buy. Obviously, we need to wait to see what it looks like at 10 o'clock tomorrow morning. And this is the one here that I'm looking at, and the reason why I'm liking it, I'll just bring it up a little bit. And we've had a massive big push. It's gone up really, really nicely. So we've gone up from about 8 cents all the way up to about $5. Now we've pulled back down to a low of $2.25. Stochastics are oversold. This has been a very, very nice pullback. I'll just have a look. I just want to see something. And let's just say that the rally started around about here. And we'll just do a Fibonacci retracement and see what happened. So if we have a look at that. This is in the golden pocket. So the golden pocket that we're talking about with Fibonacci is the pullback here between 0.618 and 0.5. So I'll just draw a box in there so we can see that very clearly. And I'll also open it up as well so we can see those numbers quite a bit better than what. Yeah, there we go. So coming down here from that low to the high, and I hadn't done that low before. You know, like that to me just looked like the most obvious support where it broke out from. But here we can see the retracement here is exactly the 50%. This line here, 50% line of the retracement. This one down here is the 0.618. Now these have been proven, like, you know, I think they estimate around about 80% of Wall Street use these Fibonacci numbers for retracements, just to be looking for entries or positions, to be looking for reversals. Now this is a perfect scenario for a reversal right here, and especially with this doji that's happened right here. I'll go through the engulfing first before I go back to this, because I actually want to go through not just this doji here, but I also want to go through Bitcoin's doji. So let's go over to Bitcoin and we'll just have another look at the engulfing pattern and exactly how it works and why it just seems to do so well all the time. This is one here that we ended up buying, and we're buying the best in our watch list because of this engulfing pattern here. So we've had a nice big push, then we've pulled back support at the 50, and then we've come up again, and now we've pulled back here. Now we've undercut these lows. It's very important that we undercut the lows, and the reason being is because big money, this here is taking out, so once this has gone up and pulled back, everyone, now that we've got reversal happening here, everyone buys and puts a stop loss just below the low here. Now it's gone up and it's given a hammer, a shooting star, and now we've come back down and we've made these, broken these lows here, which has taken out everyone's stop losses, which is exactly what big money want to do. So as soon as I saw that happen there, that we've taken out the stops, and then all of a sudden we've come straight across and we've broken above the 50, broken above the 9 EMA, and we've got increased volume above yesterday's lows as well. I'll show you something else that's really, really important in the markets, and that this is to do with money flow, money coming in and money going out. So if we're looking at this line here, that is making lower highs and lower lows with the market, and then this here is actually money flow when we're talking about stochastics. So we've got a low and a high. And so that means that there's more money coming into the markets, there's more strength coming into the markets when actually we're trading lower. Now, this is all orchestrated. This is big money coming down to collect all these stop losses, and also to make sure that once these stop losses have been taken out, that there's no weak hands in the market. So now we've got a good chance for a good rally. So I want to see this candle here, this one here. So it opens from, it closes here yesterday, it opens here, travels up, and then travels all the way back down, and then closes at this candle here. So it's gone up, then down, and then closed here. Straight away it's gone across, and then traded down a little bit, and come through and made a green candle, and then we've pushed up through 2 moving averages on increased volume. Now we've got the divergence here again, so this here was a clear enough buy for me. Like, we didn't even have to really consider that. I think the only thing that concerned me a little bit was that we're under 2 moving averages there still, but we've passed the major ones on increased volume, and we've got divergence. So that, to me, as long as you've got 3 major points of execution, then you can probably go ahead with the trade. I usually find. Here we go, we've got another engulfing pattern that's happened right here again, another engulfing pattern there again, another engulfing pattern here again. They're all over the place, and if you're doing this in an uptrend, another engulfing pattern there again. you know, and there's another engulfing pattern there again. If we're doing this and having a look at this, you know, chasing an uptrend, we'll usually find that during that uptrend on its way up, we'll see a lot of engulfing patterns, but we're looking for those on the pullback. So we want to have a nice big push first. If we don't have a big push, it's not worth your while, unless we've got a flat trading like this, and then it gives a pump like that. But what we want to see is a nice big push like that, a comfortable pullback, and then we want to be breaking out and showing buying signals here. So that was that one there that I was actually looking at. Now let's just go through and we'll just have a look. So that's the engulfing pattern. Now let's have a look at and see what happened to the market last night. So we have come down. So we've got a head and shoulders pattern really. You know, there's the left and there's the head and there's the right shoulder there. So, but the main thing is we've got a massive supportive area, you know, which just seems to come down a touch, and you know, like, and then we turn around and head back up. But here we've got the same sort of scenario. This is kind of the thing that no one knows where the market's going to go or what the market's going to do. But what we can do is put, you know, odds in our favor to say, okay, well, this has a high chance of moving in our direction, and so you know, we're going to take advantage of that opportunity, and we're going to buy. Just a second, I'll just get this. One of these actually works. I'll do that. And so there's that one going up, and then this one going down. So if we're having a look at that there again like that, we can see that this has been orchestrated again. I'm just going to draw a line down the bottom there, so we can actually see like the lows of this area here. Just sorry, I'll get control of this thing in a sec. I'm just going to delete that one there and leave the bottom one on. So we're going from the bottom of this base here. So we've almost come close on twice, but here we've definitely come down and closed. Here we've come down and taken out everyone's stop losses. We've got divergence, and you know, like, so here we go. We've got trading, you know, and taking out all the stop losses, but yet there's money flow coming into the market, and we've got massive volume in comparison to yesterday's red volume. So here, let's just have a look at the psychology that's happened here. And so we've gone up and we've had a false buy there, you know. So here I was buying at this stage here, but I only bought one half of one position here. I didn't really trust it all that much. I wanted more confirmation. Even though we did enter the market, I got stopped out. But anyway, that's what happens. You know, like, you put the odds in your favor. Sometimes it works, or most of the times it works. Other times it doesn't. Here's an engulfing pattern that didn't work. So, you know, like, you know, you can see the ones before and the examples previously that, you know, there's about 5 or 6 that worked, and you would have made very good money on them. If you're making good money on those ones, like, you know, 50%, 30%, and, you know, 15%, you know, if you've got 3 trades like that and end up closing out of those kind of profits, there's some good profits there. If you risk 1% on this or 0.5% on this, it doesn't matter, you know, because you've made it up in the previous rally. It's gone up there, missed another 0.5%. Yep, okay, no worries at all. Now I'm down 1% on this account. But yet, if we have a look at the previous entries, let's just go back here. So I was actually selling on this one here. So it's a doji sell signal. You know, if we're reading candlesticks, there's another doji there, and engulfing to the south, and we had a little bit of a run to the south. Then we got an engulfing, bouncing, you know, like on previous resistance becomes new support, and then we had a bit of a run. But this one here is big money collecting everyone else's, you know, they're just widening the box. But this was here, it's just a big cleanup. Gone up, and then we've got a doji at the top. Stochastics are overbought, and so straight away on this candle here, as soon as that turned red, I started selling. Actually, I should probably change that to around about there, because that was the actual time that I sold, or, you know, started selling. So I sold around about 40% of my holdings at that time there, and I'm still holding around about 60%, and I'm looking to buy more. So looking at this doji here. So we've got a doji, and so what's actually happened is that we've had a massive big decline here. You know, it's big reversal, but this is big money orchestrating this as well. So then we've come down, we've got a harami, which is actually saying that the buying has stopped. Oh, sorry, the selling has stopped at this stage here. And then we've got indecision, a massive indecision here. So we've opened up, and we've traded all the way down to here, and then we've traded all the way up. Actually, I think we traded up, and then all the way down, and then we closed back here. So this morning we opened. So we've got to think about the psychology of this. You know, like, we've opened up, and, you know, gone green, say, you know, just to entice, you know, people. The big money would orchestrate this. So they would have this going up here, so that they would entice buyers to buy. This is the weak hands. And then they trade all the way back down. This is a terribly red candle. You know, it looks horrible back at this stage here. It's red, and then everyone's going, oh, no, you know, like, well, what are we going to do? Well, we've got our stops below the lows here, so we've sold out. But not only have they sold out, but they've activated short sells as well. So anyone who's wanted, you know, bet that the market's going to go down has been activated into this, as well as the people being stopped out of their long positions. Then it's come back up there and stopped, And so all the people that were short, so all the people that were long have been stopped out down here. All the people that entered a short position have been stopped out up here. Now we're right to go again. So they've got rid of the weak hands. They've cleaned the floor. And then we come across here, come down, and now we've got a green candle at the moment. I'm not actually going to make any decisions until 10 o'clock tomorrow morning, but what I'd actually like to see is a good pump, to get above these, like a good strong volume. I want a massive increase in volume, and I'd like to see it close above the 50 moving average. But anyway, it doesn't really matter what I'd like to see. It's, if that happens, we'll act on it. If it doesn't happen, we won't be acting on it. One thing I did do, or that I am looking at, there's Bitcoin. One thing I am looking at is this one here. So this is virtual, and this is the one so we got stochastics are oversold here. And then we've got a doji on the 50. We've got a 50% retracement. It's in the golden pocket, and I'm looking for some sort of I've got an alert for just above the high of this candle here, just to see what happens. If that was to go through, I might enter half a position, close above the 9. With supportive bounce with extra volume, I'll probably buy the other half. Anyway, traders, I'll leave it at that. I just wanted to do a very quick video. This is on a brand new channel, and I just wanted to kind of do things a little bit differently, I suppose. So this is what it is. One more thing before I go. IBIT. So this is BlackRock's. Look at that, beautiful. So this here, this here's a buy. We've come down, we've gone, and now we're closed above here. This here's a buy. This is buying material. We've got increased volume above the previous day, and we've got here we go. We've got divergence again. So we've got highs coming down, making lower lows, and we got from here. If this was to turn, I'm actually waiting for this one here to turn and go above the red to see what happens there. One other thing, there's two more things that I want to have a look at, and that is look at that, this reversal as well. So we're not quite divergence anymore because we've got to bring that low into play. But yes, we do have divergence. So here we are making lower lows. This here's reversal, and we've got stochastics on the way up. That's with the NASDAQ. So let's have a look at the SPY. Just one last go at the SPY. Let's just have a look at what happened here. So with the psychology here, that's a big red candle. It's gapped up and it's sold off again. Now we've gapped down, and the buyers have bought it straight back up. If we have a look at this, that's not quite an engulfing candle. That's like a kicker signal, actually. This is one of the strongest signals. That's why you get that. But, we've come back down here. We've opened down below, and we've come back up, and that's very good, very strong. Let's go back and have a look at one or two examples, because I do remember. Here's another example of what we're just looking at right there. So this is gap down, and we've got a reversal, and it's turned green right here. So as soon as it gapped down and opened here, straight, it's probably sold off just a tiny bit, and then all of a sudden it's come through, and green buyers have started coming back in again. Massive volume, stochastics, and look at that divergence again. Here we've got a Harami saying that it's an inside bar Harami. So this is basically saying that the selling has stopped. I wonder. Let's just have a look to see what sort of Fibonacci retracement we've got here. If it does anything, works at all. So not quite. We've got that's down to almost down to the 50, but it's not. It's pretty close down to the 50 retracement. But anyway, it's so these kind of areas, the 50% retracement. So the ones that big money usually look at are the this one here, the 33.2, and the 50% and the 61.8. All right, traders, I am going to leave it there. I hope you have a good night. Talk to you again soon. See ya.